Hi, welcome back to Bazaar Morning Call. Well, for now, the market is still down about 60 odd points. The bank nifty is down over 100 points. So not a good day for the bulls so far. But India has been grappling with very difficult weather conditions. A scorching heat wave has gripped the nation. Temperatures soaring to around 50 degrees in some parts of India. This is, of course, a big positive for the consumer durable space. So we have two gentlemen to find out how things are panning out so far. Achal Bakeri, the chairman and managing director of Symphony, and Nilesh Gupta, the managing partner of Vijay Sales, join in. Gentlemen, morning to both of you and thanks for joining in. Mr. Bakeri, I want to start with you. The last time we spoke as well, you had indicated that things are expected to be pretty good this time because of the scorching summer. But can you put it down to numbers? How has June been so far? And what is the expectation like from July and August?
I mean, to be honest, I won't be able to give you specific numbers. But it has. I can tell you this much, that the growth has been in very healthy double digits. But then again, last year was very bad, and we had very low sales. So the growth is very much there, but it's on the back of a very weak summer in 2018. But this has truly been a very good summer. Has been an exceptional summer, and sales pretty much across the country has been very good.
All right. Well, that is what we've been hearing from a lot of manufacturers, actually. Let's try and get Nilesh Gupta into the conversation. Let's see if he can give us some numbers. Nilesh, thanks for joining in. Now, the rough reports one is getting is that there's at least a 20 to 30% improvement in specific sales for ACs, for instance. Would you agree with that kind of a number? And also throw in a word on pricing, because to the best of my knowledge, prices have not gone up despite the volume growth.
See, what has happened is, I would not say it's 25 to 30% overall, but in the air conditioning, right, March was not that great because we had a late summer start, but April was superb, May was good, and April and May made up for everything. So this year we have seen at our counters a 15 to 18% growth of air conditioners alone. And along with that, we have seen a growth of 20% plus in refrigerators. So that's a very positive sign. Coolers, we are predominantly in the West market where cooler is not so much, but in spite of that, we have seen a growth of 20% in coolers also. Okay. So I think overall, this summer has been one of the best summers we have seen in the last 2-3 years.
Okay, so 15 to 18% growth in ACs, 20% growth in coolers. But are you noticing more offtake in terms of lower end products? I mean, I'm just trying to understand whether there is volume growth, but does it come at the cost of margins for some of these companies?
No, I don't think so, because now what has happened is the market has totally moved into the inverter air conditioners. And inverter is at a higher price than the fixed speed compressors, regular ones. And now more or less, I think next year we won't have fixed speed anymore, for the simple reason is the inverter production has gone up so high that fixed speed may become more expensive. It may come the other way around. So I think that's not the issue. And every year what has happened is the energy ratings keeps on changing. So what was 4 stars last year would become 3 stars this year. So I think ASPs have not gone down. So I don't think so there's a pressure on margin for the manufacturers either.
Let's actually ask the manufacturer that question. Mr. Bakeri, would you agree? While prices have not gone down, again, we haven't seen any meaningful price hikes either. Looking at your input situation, where does this leave margins for the next few quarters?
Well, what Mr. Gupta was referring to was air conditioners. But in air coolers too, there is no significant, at least at our level, at Symphony's level, there is no significant pressure or change in the margin scenario. So it is within a band, a narrow band of previous years. But the growth has been pretty secular, I would say, in terms of, across the country. And when I say across the country, it's meaningful because in different kinds of products sell in different parts of the country, while in the south and some parts of the west, some sort of smaller and lower value products are sold, whereas in the north and in the east, some larger and higher value products are sold. So as far as coolers are concerned, and specifically as far as Symphony is concerned, the growth has been pretty much across the country, and the margins have really not been under pressure.
What percentage of sales happens through financing, Mr. Bakeri? The reason I ask is because, as we know, there's been a big liquidity crunch across the board. Are the pockets of consumption have faced the heat because of that. Has the consumer durable sector also been hit? And for Symphony itself, has it mattered at all?
A fair degree of sales does happen through consumer finance, but as far as the general liquidity in the market is concerned, I really don't think that has affected coolers and specifically Symphony, because ours is also a sort of a product which is, it's a need-based product. So when the heat is there and the temperatures are soaring, you just sort of need to have something to give you comfort. So regardless of the price, and you manage to find the resources to acquire a product. So the temperatures were so high this year that people have, regardless of everything else, sort of invested in our coolers. But yes, every year we see a growing trend of consumers resorting to consumer finance from the likes of Bajaj Finance and so on and so forth. We have not seen any significant change this year.
Okay, I want to ask the same question to you, Nilesh, as well, because some of the analysts have been blaming slowdown in consumer financing for the overall consumer slowdown. What is it that you see at dealerships in terms of financing options?
See, at our counters, we have seen in the last 1 year, in fact, the number of options have grown. All the banks have come into consumer durable financing. And I think that's only thanks to the Bajaj Finance. And I tell this to the Bajaj team also, that every quarter you publish reports, which is so healthy that all the other banks are saying, boss, this is the place where to be in. So we are seeing all the banks, ICICI, Kotak, everybody has jumped into the consumer
But are they
space.
making inroads? That'll give us a clue on Bajaj Finance as well. Are the others making inroads in their market?
They are actually now setting up the footprint. Whether they'll make inroad and how much inroad they'll make, I think it's for another year or two to see. But they've already put a foot in the door, that is for sure.
Okay, so what percentage of all these products get financed through, say, consumer finance? I mean, what percentage is it? Has it gone up over the last couple of months?
Not over the last couple of months, but over a period of time, last 3-4 years, we have seen every year it's growing. And right now we are standing at nearly 70 to 75% people are buying on consumer finance. And we are seeing another one more change in consumer behavior. Not only that they want on consumer finance, they want schemes which are zero down payment. So they say, you just give us a product, we don't have to pay anything right now, we'll pay every month.
So zero cost EMI and zero down payment.
Zero down payment, exactly.
And you're saying that almost 70 to 75% of your total sales are happening through the financing channels.
And now what has happened is even credit card companies have started doing it. Swipe a card, you don't need anything. And they are offering the credit card. In fact, this all trend of credit card EMI started with the mobile companies because they wanted to bring in affordability so that they can sell their higher end phones. And the consumer durables latched onto that.
Okay, I just have one last question for Mr. Bakeri. We've been talking about how this summer has been so scorching and it sort of helped sales, etc. But there is this overarching theme of a consumption slowdown. So the real estate sector is under a lot of pressure, and that impacts, the products that you sell, etc. Once this summer is out of the way, do you see a slowdown resume? I mean, how are things on the ground now?
Because of the good summer, a lot of the inventory, both at our level and as well as at the channel level, has pretty much been cleared out, which had accumulated over the last couple of years. So overall, I would say that the sentiment, at least in the channel, is very positive. As far as we are concerned, we are less impacted by the economy and more by the temperature. So even if the economy is growing at whatever percent and the temperatures are just not high enough, coolers won't sell. And if the economy is not growing and if the temperatures are high, coolers will sell. So we have sort of seen that this year as well. So while we do hear from the market about overall slowdown, in real estate and other segments, but as far as our products are concerned, as I said, because the temperatures were so high, we haven't faced that slowdown, and because we managed to clean out all the inventory, the trade sentiment is very high. and that is what matters in the off-season. In the off-season months, it's the trade which really invests, and because they are sort of devoid of inventory and their sentiments are high, they're all hopeful that we'll have a good summer next year as well. So we do expect healthy sales in the off-season months as well.
Okay, Mr. Bakeri,
Beginning
Nilesh,
July.
thank you so much for stopping by. I must tell you, it's one of the few sectors that's speaking about an up move. Otherwise, all around there's gloom and doom. In fact, there's gloom and doom in the market as well right now. So we're inching towards the lowest point of trade. We are at the lowest point. Anuj, does this look like it could be a trend day today on the downside?
Looking like that, Sonia, for sure. But the market's broken the range. And when the range expansion happens, 100, 200 points come easily because of that itself. And that's what's happened once 11,850 was broken. On the Nifty, we are now at 11,757. The 50-day moving average is 11,681. So I think we are almost there. On the Bank Nifty, we are 30,472. The 50-day moving average is somewhere around 30,200. So we're nearly there as far as those indices are concerned. But one thing is sure, that from a buy on dips market, this has turned out into a sell on rally market. That no one should have any doubt about. And this morning, the first uptick was all that the market gave you. By the way, IndusInd Bank is recovering a bit. So there's some bit of buying as well happening in some stocks, but overall it's still a downward day. Ashwani Gujral and Mitesh Thakkar back with us. Prakash Kaba also joining us. Ashwani, 60 points down on the Nifty, 138 on the Nifty Bank. Are you running your shorts, covering them? What's the call on the index, and what are your stock calls?
See, just in the very short run, because of last 3 days being down, the market's kind of overstretched a bit, so we have covered our shorts. Now we are looking for rallies to take fresh short positions, because we had the last hour sell-off, and then today again you have a bit of a sell-off. So while the downtrend stays, any sort of 50 point rally should be used to sell into the market, because it is a bit overstretched, and any kind of PSU bank news etc. can easily drive a bit of short covering. Having said that, individual stocks, LIC is a sell with a stop of 535, target of 510. BEL is a buy with a stop of 108, target of 115. And Axis Bank is a sell with a stop of 795, target of 780.
Okay, Mitesh Thakkar, Prakash Gaba are also with us. Mitesh, has this become a sell-on rally market in your assessment, and how do you approach it for the rest of the day now? What would the top stock ideas be?
We've taken some short positions. Definitely, I think 11,780 being taken out, and I waited for about 8, 9, 10 points to happen after that, and taken a stop at about 11,850. I think it does look like that it's kind of giving a mild breakdown. We should see it head towards, or the Nifty head towards 11,670, 75 to begin with, and below that I think further downside can happen. So yes, I think I would be comfortable selling here or on mild pullbacks which happened during the day. That apart, the stock calls which I have right now, I have a sell on Amara Raja Batteries with a stop at 617 for targets of 590, and Balkrishna Industries is a sell with a stop at 768 for targets of 725.
Okay, plenty of sell calls coming our way this morning. We also have Prakash Gaba joining in. Prakash, how would you look at the day, and in terms of stocks, what are you doing?
Well, I feel it looks like a trend day down, because the up move that we saw a couple of days back of 3 days up move was more of a reactive up move. It's gone up to come down. So I think we should proceed down. Maybe 11,600 in the next couple of days is possibility. Who knows where it goes. But I like 2 stocks on the short side. Bajaj Auto looks like a weak stock. Can see a slide to around 2,800 zones. Stop above 2,880. And ACC is another short from the cement pack. Looks like 1,500 is possible. Stop above 1,545.
Okay, well, thanks gentlemen for joining us. But the one stock, in fact the entire group that's under pressure is the ADAG group. Reliance Infrastructure particularly is down over 10%. The street has been very nervous. Of course, the results were weak, but on account of the auditor's observations as well as the high debt and pledge issues, we spoke to the management on a whole host of issues, from the auditor's comments, the monetization plans, their confidence of meeting all the debt obligations. Here are the key takeaways from that conversation.
these are the same auditors who have signed the Q3 accounts, and there is no significant or adverse change from Q3 to Q4. So when you see these observations, I think they are trying to protect themselves and write it more as an activist what they are doing it. So I think I am not overly concerned on that. We would be exiting our road portfolio. We have already announced our Delhi-Agra road monetization at 3,600 crores. We would be receiving that money in next 60 days as we complete some of the CPs to the agreement, which is usual. We are looking at monetization of our road assets. We are looking at our regulatory assets, which are under approval of almost 22,000 crores, and arbitration proceeds, which are 8,000 crores. Even if I take 25% of this realized in this year, and which I believe are realized, which is realizable, I don't have to worry about anything, because I won't have any debt in that case by end of this fiscal year, but rather I would be sitting on a cash pile. In Reliance Power also, we have impaired our investment by 2,000 crores. Given that, I think when you are talking about we have given the advances. So as I was telling you, the prudent policy is that not only receivables to be done, but when you give the advances, you need to provision that. So we have provisioned 2,000 crore over there, but that does not mean we have write off that, because we believe these are the delays in the project and it would be recovered in the near future as and when these projects are completed. Reliance Infra has no plan to raise any more debt on its books. We are looking forward to pay off all the debt in our book through the monetization and through the regulatory assets which are unapproved as the money comes in. I think these are business as usual, some of the stuff which you take approval from your board, and these are the provisions which have been made into the accounts for that purpose. I believe that some of the cases are where judgment is reserved, or it is the final hearing going to happen, like in Delhi Metro, in Supreme Court in month of July. I do expect that in the Q2 and Q3 some of the judgments would come, and I think that is where I'm expecting that in this fiscal year at least there would be realization of anywhere between 5,000 crore to 7,500 crores.
Okay, that's Puneet Garg of Reliance Infra. We'll take a short break.